In the past 2 months, PayPal's stock price has ran up almost 40%. And this strong move up in their stock price has come not only from the fact that the Fed has decided to lower interest rates, but more importantly, the business performance is there. They reported their earnings back on July 30th and came through with an EPS beat of 20.63%. So in this video, I want to discuss their next quarter earnings and what they could mean not only for the company, but for the stock price. If you enjoy the video, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. Year to date, PayPal has looked like a very strong performer. It's up 26, almost 27%. However, over the last 5 years, the stock is still down over 20%. And from its all-time highs achieved back in 2021, the stock price has still fallen almost 75%. Keep in mind that back when PayPal hit that $300 price target, it was trading at a PE ratio of 71.09. That is a trailing PE, and right now the trailing PE ratio for PayPal is sitting just under 20. We've actually seen the metrics behind the business improve back to levels that we saw in 2021. EPS at that time was sitting around $4.40 all the way down to $4.10. More recently, we've seen them return back to these numbers, getting up to $4.13 in their most recent quarter. Keep in mind that during this time period of 2021, money was so cheap that valuations in the stock market ran up significantly, especially for companies like PayPal that were positioned to capitalize on a lot of the economy going digital. And you can even see this drastic increase in valuation when you look at the S&P 500's PE ratio over the last few years. Back in 2020, it shot all the way up to almost a 40 PE ratio. That is significantly above where it's averaged around a 20 to 25 over the last few years. So in the short term, valuation can be very important, especially the fluctuations that you can see in the market. However, in the long term, it is also important because one of the biggest factors around a PE ratio is it is the price to earnings ratio. So as earnings come through and we see big beats like we saw with PayPal last quarter, that means that the stock price should also run up to follow suit with the earnings beat. So it's going to be very important to see how PayPal comes through in their next quarter earnings on October 29th. And right now, analysts have an average EPS estimate of $1.07 and a revenue estimate of $7.87 billion. And this estimate is a little bit surprising because when we look on Yahoo Finance, they have a very similar estimate, $1.06 of EPS expected in this next quarter. However, what's surprising is that a year ago, PayPal put up $1.30. So analysts right now are expecting EPS numbers to fall significantly year over year. However, one very important thing to keep in mind is how accurate analysts have been. In the most recent quarter, like we discussed, they were not very accurate because PayPal came through and beat expectations by 20.2%. They put up $1.19 of earnings compared to estimates of 99 cents of earnings. In the quarter before that, however, PayPal missed earnings significantly. They came through with a minus 11.5% miss on their EPS numbers, putting up $1.08 of EPS compared to analyst expectations of $1.22. In the quarters before that, we saw beats of 8.7% and a beat by 5.7%. When you average all of these EPS beats, you get a number of 5.8%. That is the average that PayPal has beaten their EPS numbers over the last 4 quarters. So right now, analysts have average EPS estimates for the third quarter at $1.06 and for the fourth quarter $1.09. That means they're expecting for the year of 2024 EPS to come in at $4.42. However, if we see PayPal beat by an average of 5.8% over the next 2 quarters, that means they would put up $1.12 in this next quarter and $1.15 in the fourth quarter, which would be a total EPS for the year of $4.54. However, things get very interesting when you assume that PayPal is going to beat their EPS by 20% over the next 2 quarters. That would put their third quarter EPS at $1.27 and their fourth quarter EPS at $1.31, which would be a total EPS for the year of 2024 of $4.85. And obviously 20% beats seems a little strong, but keep in mind that in the fourth quarter of last year, they put up $1.38 of EPS. So $1.31 of EPS would actually be down year over year. And on top of that, for the full year, high-end analyst expectations are sitting at $4.77, not very far off the $4.85 that we projected with the 20% beats. And here's how that would affect expect valuation. If they come through with the average EPS estimate from analysts of $4.42, their current valuation is 17.6. However, if they come through with an average beat over the next 2 quarters of 5.8%, that would put their EPS at $4.54 and their forward P ratio at 17.14. If they come through and beat by 20%, that puts their EPS at $4.85 and their forward P ratio at 16.04. And in my opinion, PayPal should be trading at a PE ratio that's more in line with the rest of the market, anywhere from 20 to 25. So at a 16.0 forward P ratio, if they were to trade up in terms of their valuation, that would be a price target anywhere from $97 up to $121, which would be a return of anywhere from 25% all the way up to 56%. And here's how those numbers change if we assume that PayPal is actually trading closer to a 17.5 forward P ratio. Again, making the assumption that it should trade in line with the rest of the market anywhere from a 20 to 25 forward P ratio, that would create a price target anywhere from $88 to $111, which would be a return from the current stock price of $77.81 of anywhere from 14% all the way up to 43%. Honestly, I wouldn't be surprised if we see PayPal putting up beats over the next 2 quarters of anywhere from 10 to 20, maybe even 25%, especially in the 4th quarter. I wouldn't be surprised if they come through and actually beat last year's numbers of $1.38, because it seems like the business is a lot more well positioned than it was a year ago. And if PayPal is consistently beating on their numbers, you would expect that their valuation will start to increase as well. As companies are growing faster and faster, their valuations tend to go up in a more significant manner, and that could help PayPal's stock price in a very big way. And Alex Chriss, the CEO of PayPal, seems to be doing a very good job of sandbagging numbers and not getting investors overly excited about quarters and earnings that they're going to put up. And that allows the company to put up solid beats, which again keeps investors happy instead of having them consistently miss on their numbers. But keep in mind, don't buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, how do you get an astronaut's baby to stop crying? Check the comments down below for the answer. Thanks for watching.